Welcome to today's market report.
Shares on Wall Street took a breather on Friday after a tech-driven rally, and the US Treasury yields rose to fresh highs as markets evaluated a world of elevated interest rates and the effects of Russia's war in Ukraine. The Nasdaq fell about 0.16% as technology and healthcare stocks pulled back, while the Dow Jones and S&P edged up about 0.5%. With energy and financial shares rising on oil price gains and bets on interest rate hikes by the Federal Reserve, the Pan-European Stock 600 index also inched up 0.11%, but was down on the week. Share prices have been supported by Global Flash Purchasing Managers Index data for March this week, showing the world economy was broadly resilient, but the longer-term economic outlook is making investors cautious. Barclays, for example, cut its 2020 world economic growth forecast this week to 3.3%, while traders have ramped up short bets. Global bond markets continue to see a week's long sell-off. Yields on benchmark 2 and 10-year US Treasury notes jumped to almost 3-year highs on Friday as the market anticipates inflation will spiral higher, forcing the Fed to aggressively hike interest rates. Oil prices turned positive on Friday after reports of a missile strike and a fire at Saudi Arabia's state-run oil company Aramco's facility. US crude rose 0.63% to $113.05 per barrel. Brent was at $119.78 per barrel after dropping more than $3 earlier in the session. Both benchmarks were heading for their first weekly gains in 3 weeks. The British pound rebounded from intraday losses, though it failed to reclaim the 132 mark, custody of a risk-on market mood, Fed hawkishness, and Bank of England's rate hike, with one dissenter perceived as a dovish increase. The cable is trading at 131.82 after the market sentiment improved, boosting appetite for risk-sensitive currencies like the GBP. Nonetheless, amid an increased appetite for the greenback, disappointing data coming from the UK put a lid on the cable recovery. Eurodollar, meanwhile, is glued to the 110 level.
This is today's market news. Thanks for listening. We'll see you next time.